and we're live. What's happening, people? Good morning, America, and welcome everyone to our live stream. Watch us on your favorite media channel, learn how investments work, win a prize every day, and find out what most Forex brokers don't want you to know. This show is proudly sponsored by our partners at Forexy and Markets.com. Join us every day at European Markets Open and US Markets Open on your favorite media channel. Get the latest news at Markets Opening, learn what most Forex brokers don't want you to know, and get rewarded for it. Big giveaways every Tuesday and Wednesday morning, guys. You could win a live trading account, cash prizes, iPads, one-on-one mentoring from reputable industry specialists, and much more. You can find all the links in the description down below. Follow us on your favorite media channel and support us in delivering more great content. Good day, lovely people. What's happening? We are only a few minutes away from the US markets open, and we had a full day today in the economic calendar. Minutes ago, the initial jobless claims were announced, along with the core CPI and CPI data on the US dollar. And apart from the initial jobless claims, everything else came out in red. We will see the charts in a minute, and our special guest for today will join us for another round of great market talks. Straight from the heart of London, guys, Neil Wilson, Chief Market Analyst at Markets.com, will join us in the next few minutes. But before that, let's have a quick look at what's expected to happen today on the US front, what happened today in Europe, and how the markets reacted. US stock markets are seen mixed at the opening as COVID-19 virus surged again. Initial jobless claims came out better than expected at 709,000 versus 735,000 expected by economists. Later on, in only a few hours, Federal Reserve Chairman Jerome Powell, ECB President Christine Lagarde, and Bank of England Governor Andrew Bailey will address a virtual forum on central banking at 11:45 a.m. Eastern Time. Crude oil expects the crude oil inventories to be announced later today, a day later than usual due to Veterans Day holiday that we had in the States yesterday. And Bitcoin, guys, the absolute champion of all times, broke the $16,000 mark 3 hours ago. Let's have a quick look at top five things to know in the markets today, guys. And then we're going to welcome Neil Wilson, straight from the heart of London. So, top 5 things to know in the markets today. Global stock rally fizzles. The global rally in stocks on the back of Pfizer's vaccine news ground to a halt as markets took on board the near-term challenges of a still potent COVID. European stock markets were already falling even before the release of a surprise drop of 0.5% in Eurozone industrial production in October. That underlined the impact of a second wave of COVID-19. The number was a surprise, not at least because no country has gone so far as to shut its factories again. Industrial bellwether Siemens stood out with a gloomy outlook for the year. Markets were also unsettled by rising cases across New York State a day after New Jersey tightened its restrictions on non-essential businesses. However, New York City Mayor Bill de Blasio, said it wasn't yet time to impose any sort of fresh lockdown in the city. This was number 1 on the board, guys. We are exactly 6 minutes away from the US market open. Number 2 on the board, jobless claims CPI due. The numbers came out, guys. We saw what happened. We saw that the only number that came out in green was the initial jobless claims. Right, let's see. We have some comments. Okay, comments which are not in English again. Wow, these spammers, guys. Can you believe it? Right, let's move on to number 3 on the board. US stocks set to open mixed. Tech rotates back into favor. US stock markets are indicated to open mostly lower today, with a rotation trade into cyclicals and value stocks continuing to correct. At 6:30 a.m. Eastern Time, Dow Jones futures were down 125 points or 0.4%, while the S&P 500 futures were down 0.1%, while Nasdaq futures, which had already outperformed yesterday, doing so again with a 0.3% rise. Analysts suggest that the shift into beaten down value stocks had gone too far initially, while underlying demand for the insurance offered by growth stocks remains healthy. Walt Disney, guys, and Cisco Systems led a bunch of quarterly updates, both of them after the closing bell. Number 4 on the board, Powell, Lagarde, and Bailey to talk about the policy outlook. Federal Reserve Jerome Powell, ECB President Christine Lagarde, and Bank of England Governor Andrew Bailey will all address a virtual forum on central banking today. Powell's appearance will be the first since Joe Biden was declared the president-elect last weekend, which may allow him to be less guarded about the policy outlook than he was at his press conference last week. Lagarde, meanwhile, had told the same event on Wednesday that the ECB is likely to focus on its cheap long-term loan offerings and on its 1.35 trillion euros pandemic-related bond buying program when its governing council meets again in December. Her failure to play up the ECB's discount rate suggested to analysts that the ECB will leave its official interest rates unchanged, however. Bailey's comments will again be scanned for hints about whether the Bank of England will experiment with negative interest rates, something the market is still betting on. And the last but not the least, guys, 2 minutes ahead of the U.S. market's opening, oil steady as IEA downgrades forecast U.S. inventory data due. The International Energy Agency followed OPEC in revising down its forecast for global oil demand this year in the face of a resurgence of COVID-19 across the Northern Hemisphere. The think tank also predicted a more modest rebound in 2021 than it had previously expected, saying that the effects of any vaccine against the COVID are only likely to be felt in the oil market from the second half of the year. It also noted that global oil stockpiles remain historically high. The U.S. government will update its weekly stockpile data at 11 o'clock a.m. Eastern Time, a day later than usual due to the Veterans Day holiday. This is exactly what we're talking about for the last 3 days, guys. Oversupplied oil markets. OPEC and OPEC Plus is also worried that if they're going to continue the oversupply, probably the oil prices having little to no demand as things stand right now, and with more countries going into lockdown, and with the COVID-19 pandemic accelerating, surging in the U.S., okay, there's no point for that. There's absolutely no point for them to oversupply the markets, because the result will be very predictable. Oil price might come down to $10 a barrel once again. We only saw this a few months ago when oil prices, when all the stockpiles in the world were at full capacity and oil price went down to zero. Yeah, as soon as everyone had to actually pay to get rid of the oil surplus on the markets. So an oversupplied market is not good for anyone. However, we saw oil pushing high for the last couple of trading sessions, settling above the $40 level. Let's see what's going to happen today, guys, after the crude oil inventories that will be announced in a couple of hours from now, if I'm not mistaken. We are 22 seconds away from the U.S. markets open, guys. Let's ring the bell, and then we're going to welcome Neil Wilson, Chief Market Analyst at Markets.com, for the U.S. trading session. Let's see what he will bring us today. He promised me yesterday when we spoke last time that he will have something for us. So I'm looking forward to see what Neil Wilson has for us today. And 3, 2, 1, guys, welcome to the U.S. trading session, everyone. I love my bell. I know many people hate me for this, but I absolutely love my bell. Let's do this, guys. We're coming back live in 30 seconds with Neil Wilson, Chief Market Analyst at Markets.com. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
And we're back, guys, as promised, with Neil Wilson, Chief Market Analyst at Markets.com, straight from the heart of London. How are you, Neil? Good day, good afternoon.
Hey, good afternoon, Andrew. Yeah, very well, thank you. Yeah.
Great pleasure to speak to you today. First time under a new U.S. president. It seems that we both lost the bet. We both saw Donald Trump winning the elections, but it seems that Joe Biden had a bit more fans than Donald Trump. What do you think about this year's presidential race, Neil?
Well, I mean, it's been remarkable, really. I mean, it's still going. I think that's one thing to remember, that Donald Trump's pulling out all the big guns here to try and turn the result. And whilst the international community and the investment community and most people are accepting Joe Biden as president-elect, the Republicans are closing ranks around the president. And, there is a chance that he does end up pushing state legislatures to appoint electoral college voters who will vote for him. There is a risk. I think it's a tail risk, a very small tail risk, but there is still that chance that we end up in a sort of constitutional crisis in a couple of weeks' time. So I think just bear that one in mind. Donald Trump is nothing but if not willing to break rules. So I think there are risks that maybe aren't being fully priced by the market, but I do think they're very small, sort of 1 in 100 type chance of happening.
What do you think brought Donald Trump to eventually lose the elections after such a tight race? The foreign agencies, he was so close, man. He was so close. What turned these elections completely against him?
Well, I think COVID probably is the thing that did it. It's remarkable how close he got, even despite the handling of the COVID crisis, which for many people was subpar. And I think clearly there was an energetic Democratic vote. They managed to get their vote out with the postal ballots. And I think Donald Trump's not been everyone's cup of tea, and it's remarkable how successful he's been. Actually, the fact that he got so close this year, and the fact that he won it 4 years ago, is really indicative of just how far away many voters in the US are from the Washington elite. And I think that has not changed. And despite Joe Biden seemingly winning, that situation is still there, and it's not been changed by the result.
You know what surprised me? Even though many people around the world hate Donald Trump, even though a lot of Americans hate Donald Trump, he got a lot of votes, man. He was so close. That means only one thing. He definitely did something well for the economy or for the people if so many people voted him.
Yeah, for sure. I mean, the economy was doing very well before COVID, and really he was the first president to take on China and really place China as a strategic enemy. And that, he's really made up ground that had been lost under the Obama administration on that front. They sort of rolled over and let China do what they wanted.
Exactly.
And Donald Trump has pushed back against that, and that's vital for the American sort of strategic influence in the world. And Joe Biden is inheriting that, and Joe Biden's not going to shift from that. I think the Democrats are as tough on China as the Republicans, and I think it might be a less capricious kind of president that we're dealing with, and that the Chinese are dealing with, but not any less tough, I don't think, in terms of intellectual property and the sort of geostrategic kind of element of it. So I think Donald Trump, and actually even in the FT is very sort of pro Biden, pro EU type paper, and it was highlighting that under Donald Trump, income among the lowest paid people, the poorest in America, actually rose significantly under him, more than other presidents. So he's done a lot for the economy and for a lot of the poorer in American society. So it's no wonder to me that he managed to hold on to that support.
Yeah. I feel you a bit sad. Are you a bit sad that Donald Trump lost? Because last time you told me you were supporting him.
Well, I guess you want the known quantity. He although he was a bit uneven in what he did, unpredictable. He was a known quantity, and Joe Biden and Kamala Harris and the new regime will be less of a known quantity. And he's just interesting. He made life interesting for people that watch the markets.
He was one of my best trading partners for a while. Now, do you see any chance in a historical turnover with the U.S. elections? Is there a tiny chance that things will turn around 180 degrees?
I think, as I say, probably 1 in 100. It depends. There's a very tough. He needs to really get 3 or 4 or even 5 state legislatures that are Republican controlled, where he's lost closely, to to essentially overturn the popular vote, because it's the state legislature that could do that. They could say, well, we're appointing these people who are going to be the electoral college. And so they get sent off, and then they go and vote for the president. And they're meant to vote as a block, except in, I think, New Hampshire and Nebraska, where they can split it. But they're meant to vote all, in a block for the candidate that their state voted for. But you get faithless electors. That's been known, where people turn up in Washington and say, well, I'm not voting for that candidate that I'm supposed to vote for. I'm voting for someone else. And the legislature itself can appoint the electors. So if it appoints Republican pro-Trump electors overriding the popular vote, in a sense, there's not an awful lot, I think, constitutionally that can be done about that. So it's possible, but
it's 1%, basically. We're going to see a revolution, man. If that happens, can you imagine all the Biden supporters?
So that happened,
yeah, it's going to be a revolution. Now, you mentioned Kamala Harris a minute ago. Shortly after the results, that Joe Biden won, we saw the tech sector a bit scared by the new U.S. president. Joe Biden was very irritated during the campaign at Facebook, in particular, taking issue with the company's decision of not to fact-check political adverts. On top of that, he disagreed with how friendly the Obama administration was with the tech giants in Silicon Valley. His only ally, basically, no, their only ally, Silicon Valley's only ally is Kamala Harris. Yeah, since she was, what was she, district attorney in San Francisco or something like that. Now, Joe Biden, I must say it, he's old, he's 77 years old. How well do you think he understands the tech sector?
I know, not terribly well, I don't think. But I mean, people will be making, judgments on that sort of thing. Will probably come down to, the Senate, and I know that there's Democratic-led committees which have been quite aggressive, taking quite a hard line on big tech. I think there is a sort of antitrust move, clearly with the DOJ as well, and I think that could be pursued. But there needs to be an appetite to do that, and ultimately, from an investing and sort of shareholder point of view and trading, it's does it actually materially make a difference? Would it affect Alphabet shares if YouTube was spun off? I'm not convinced.
They're just going to move to China, probably. And let's not forget that the big tech giants actually contributed. Yes, some of them contributed to Joe Biden's campaign. So hopefully Kamala Harris will help them a bit. Will be on their side. Now, vaccine. There's a lot of hype around the vaccine. Apparently, we have a vaccine almost ready. Pfizer announced, and we saw the markets reacting to that. A lot of hype. What the hype is deflating as fast as it inflated. Did the markets overreact, do you think? Did the world overreact on the vaccine?
Yeah. I mean, in the sense that markets do. You get news like that. Markets tend to overshoot on the way up. They overshoot on the way down. Market, that's the nature of these things. They overreact, and then you get a bit of payback. And so it's been the sort of the way things have gone have been kind of how we expected them to. You get that real blips higher on the value cyclical sectors. You saw the Russell 2000 rallying quite hard, the Nasdaq 100 down, as you had that rotation out of the growth momentum stocks into the value cyclical areas. And now that's just leveling out. So we're getting a bit of a constant sort of equilibrium balancing going on. And I think I think the growth isn't going, and I don't think growth is going to suddenly stop growing. I just, I think that, and I don't think value is suddenly full of growth, but I think value is looking better. So I think what you have is a broader market, a broader participation in the rally, and I think you've got generally favourable conditions for equities right now with stimulus, stimulus support, monetary policy support.
Let's see it first. Let's see the stimulus first. Do you know what scared me really, really bad? A couple of days ago, gold shed $60 in only a few hours, man. I didn't see this in 10 years in the markets.
Yeah, and that's yields went significantly higher. They're touching 1% on the US 10-year. Now it's back down today as part of that unrotation sort of move. and US CPI numbers as well today, which were a bit soft. So yields have come back off, but it was that sharp move higher in the US 10-year that really moved gold, I think, and that's always the one to watch for gold if you're trading it. It's the dollar is a factor, but the bigger factor, the stronger influence is that 10-year yield, and in particular, actually, the TIPS, the Treasury inflation protected securities, the ones that are that account for inflation. So TIPS are deeply in negative territory at the moment, and that tends to support gold, but the movement in that day to day is often what drives the price action.
I have never seen such a drop. Right, a few minutes ago, you mentioned U.S. stocks a bit. What do you think traders should keep an eye on in terms of U.S. stocks? What's the hottest thing right now? The tech sector, the pharma sector? What is it?
Yeah, I'm quite interested in pharma, actually, because you've seen a lot of these companies that are working on the vaccine really shooting higher. Moderna yesterday was up 8% on the day. It's due to report findings from its initial interim analysis of phase 3 clinical trials. At the end of this month, you saw Pfizer rallying really sharply.
Oh yeah, that was amazing.
News. Yeah, I mean, these are big rallies, but I'm interested in sort of some of the underlying data we've got on our platform. We've got our insider trades tool, which tells you which insiders have been selling stock. The CEO of Pfizer, Burla, he sold about $6 million worth of stock the day after the announcement. Now that was all part of a predetermined trading plan that was exercised when the price hit a certain point. So of course, the rally after the announcement meant that he automatically sold his stock. It was bad, it's sort of bad optics because people read into it that he's selling stock and that he's wanting out. But there has been a lot of insider selling in Moderna and Pfizer lately. So it's something to watch. None of them that we've found like I say, on the platform and our tool indicate that they're an informative sell. We have these uninformative sales and informative sales. So if it's part of a predetermined trading plan, it's usually uninformative. If it's suddenly someone dumping a load of stock because they worried that the company is going to go south or the share price is going to go south, then it's flagged as an informative trade, an informative sell. And so that at the moment, Moderna, Pfizer, a lot of selling happening, but so far all uninformative. So, but certainly want to watch in the sense that classic.
Is it time to buy the dip?
Type trade.
Is it time to buy the dip on those two?
Well, yeah. I mean, I think perhaps it's the opposite. Perhaps it's bidding up on the vaccine hopes, and then they'll get sold as it sort of comes through next year. That maybe it's going to be tougher for them to roll out the vaccine. Maybe there's going to be greater costs involved. Maybe they're not going to make that much money off these vaccines. We don't know that yet. So there's a few sort of question marks there, and maybe it's one where it's buy the rumor, sell the fact.
Right, I like that. Now, talking about that, what a busy day we had in the economic calendar today. 10 announcements on the pound early in the morning. When I started the European opening, it freaked me out when I saw the size of the economic calendar, and all I saw was the pound. Wow. Yeah. What a bad start we had for the pound. Most announcements came out in red, pushing the pound to the downside towards that 200 moving average that I saw on a 1 hour chart. I said it's going to happen this morning. It's very likely to happen. It happened during the day. Wow. So the GDP grew by a record 15.5% in the third quarter in UK, but it's still below the 20% drop suffered in the second quarter. Lots of pressure again this week on the currency. Yesterday, we saw that Brexit talks with the EU might exceed again the deadline for November and very likely pushing to a no deal. What's next for the pound, Neil? What are they looking for?
Well, I mean, there's a lot going on with the pound, isn't there? As you say, there's the economic data and the recovery. The UK has been hit harder by the pandemic than peers, and it's recovering more slowly. I think that's the nature of our economy. A lot of service, sort of people-facing services, businesses, and that drives the economy. So it's slower to.
But in times like this, sorry to interrupt. In times like this, when the country is going through hell, literally, because you have the COVID pandemic, which affected the UK economy heavily, as we saw. We have the Brexit just around the corner. shouldn't they look for an easier solution, even if it's temporary?
An easier Brexit solution? Well,
Yes.
I mean, I think, Boris is to get this right. I don't think the electorate will ever forgive him if he messes up with the Brexit deal. If he seemed to sell out on fishing rights. So, I mean, it's a tiny part of the economy, but it's quite sort of totemic. It's something that people are really focused on, and he needs to get that Brexit deal right, and he needs to be tough on it. So I think he'll hold out. I think ultimately the UK government will do great, and no matter what happens, we've got so many things on our side: the English language, the time zone, our rule of law, skills base,
sanctions from the European Union. In case of a no Brexit, you're going to have sanctions. What is the ace that UK has in its sleeve that seems to be so determined to cut all ties with the European Union? The Japan post-Brexit agreement that they signed, or Joe Biden?
No, I think what the UK has is its own merits, its own rule of, like I say, a place that people want to invest in, a place that people like to open businesses. It's a place with a strong sort of rule of law, English language, the time zone for the financial markets, very, very deep liquidity and deep capital markets, a very strong, flexible labour force, lots and lots of good things going for the UK economy that is sort of, that makes the European Union irrelevant. Longer term, that is. I think obviously it'd be problematic if there's big queues at the border and all that kind of thing. And I think the UK will do very well with after Brexit. I think
after
trade
Brexit
deals will be done. And remember, December 31st, no deal on December 31st is not an end situation. You just start talks. You continue talks
again.
Next year.
We're talking for 4 years, Neil. Nothing has happened.
Well, we're very close.
Okay. Now, considering how bad this year was for the entire world, I was hoping for UK to be more cautious, let's say, and try and get a deal that will help them recover faster after leaving the European bloc. But it is what it is.
Well,
it's
we don't
very
want to be
difficult.
Tied to EU rulemaking, the European Court of Justice, the level playing field. We shouldn't be tied to that. We're a sovereign country. We're not. The EU needs to realise who it's dealing with. That it's dealing with an independent nation. It's not dealing with a Lithuania or an Estonia. Here, it's dealing with the United Kingdom and the world's 5th largest economy. So I think the Britain is very much taking the right line here.
Right. A minute ago, you said we have great things in UK. Yeah, we have the English language, we have the time, we have deep liquidity, and so on. But in the same time, you had, I think, over 5,000 financial firms relocating from UK. And my thing is, you can have all the liquidity in the world if you have borders. Yeah, if you cannot take your business outside to your neighbor countries, what good is that liquidity?
Well, I mean, I think what you're talking about is the financial firms are just moving headquarters, but they're maintaining their base. Their bases are very much being maintained here. And they've moved, the big banks have moved a few hundred people to Paris, Frankfurt, Amsterdam, I think, Dublin. That's fine, but London is still very much the place that people want to do business. It's still got the depth of talent and the labour force that is required. And I think replicating that somewhere else could be very difficult. And you've seen actually London's held on to its position as world leader in financial services alongside New York. So it trades what places 1 and 2 with New York, and that's not really changed since Brexit. So I'm fairly upbeat. I think whilst there might be some problems ahead with Brexit, I think overall it will come out in the wash as the right thing to do.
No doubt about it. UK is a big continent, let's say, and it definitely has the ability to recover after anything. Yeah, remember, I used to live in UK for 3 years. I used to work in UK till Brexit happened, and then I left. Now, one more question, and then I'll let you go. Bitcoin, 3.5 hours ago, reached historical level, $16,000. What's your take on that one? Oh, my God.
Well, yeah, it's been really cranking up. I mean, it's been making steady it's been really correlated with S&P actually lately, and in the sense that it sold off in the March we had a big sell everything kind of move, and then since then it's been building steady gains like the S&P. And then you got that news from PayPal that it's allowing people to buy, sell, and hold Bitcoin. And whilst not fundamentally necessarily a major game-changing type thing, it makes it more mainstream. It shows sort of corporate support for Bitcoin. You've seen Square adding Bitcoin to its balance sheet. I think something like 2% or 1 or 2% of all Bitcoin are now held on corporate balance sheets. And that's really ignited this latest rally. And increasingly, it's millennial investors who are buying Bitcoin as a kind of alternative currency, kind of hedge in the way that gold has been used.
And they're doing really well if they're hedging gold with Bitcoin, because they go in opposite directions.
Yeah.
Man, I can't find the words to say how I feel about Bitcoin. I said it 48 hours ago. I keep saying it since Monday. Guys, we might see Bitcoin reaching 17,000 because that's the most recent high in a few days. And there you go. Today it broke the 16,000 mark.
Yeah,
Wow.
I think another attempt. I'd be very surprised if it doesn't take out the all-time high in the next.
I think we're going to see it reaching 20 by December.
Yeah, I think
remember, it was December when it reached 20,000 all-time high. And I think we're going to see it in December again. And it looks like a safe haven asset to me. I don't know about other people, but every time the world economies got in trouble, every time gold was dropping, every time everything was going bad, Bitcoin was doing well, and cryptos.
That's right. Yeah, and the amount of money printing that's been going on, and this year in particular has been very supportive for that particular asset. Yeah.
Right. Okay, so let's all buy Bitcoin then. Let's start hodling. Right. Neil, thank you ever so much for being with us today. Again, I'm sorry your favorite candidate did not win the elections. But as you said, there's still 1% chance. 1% chance that things might turn around at some point. Right, Neil, thank you ever so much for being with us today. We're going to speak again at some point next week. How about Monday?
Yeah. Sounds good to me.
Are you free on Monday? It's a date.
Yeah.
I'll see you on Monday at the US markets opening. Neil Wilson, guys, straight from the heart of London. Thank you so much, Neil. We'll come back on Monday at the US opening with Neil Wilson, guys. Thank you, Neil. Have a great day.
Thanks.
All the best, Neil. Right, we had Neil Wilson from the heart of London, guy. Man, I love talking to this guy. I love talking to Neil. He's so calm and he knows so much about the markets. Now, let's take a 30-second break, guys. Sorry, and I'll come back with the charts of the day. See you in 30 seconds.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
All right, so we're back with the charts of the day, guys. We are 25 minutes into the U.S. Trading session. We're going to start with crude oil futures, currently trading at $42 per barrel, $42.02 for crude oil futures. Looking at the charts carefully, we can see crude oil futures bouncing off the 50 moving average. They just tested the 50 moving average, and then they bounced off. Crude oil started moving upwards in the last 2 hours, guys, just before the U.S. markets open. There is potential for oil to push higher today. We might see oil pushing higher, but it all depends on how the crude oil inventories come out today. The other option is oil might crash and test the 200 moving average at 39.72. If that's the case, let's see what's going to happen, guys. We're moving on to the euro US dollar, guys, the most traded currency pair in the world. We're looking at the euro going sideways, very, very undecided. It did manage to settle above the 200 MA for now, currently trading at 117.97. Doing more or less the same as it did this morning. The markets are waiting for Christine Lagarde to speak again, and if she's going to give us a bit of hope about the stimulus measures in Europe, probably the euro will push higher. Let's move on to the cable, guys. The pound versus the US dollar, which came down today and tested the 200 moving average. An hour ago, 2 hours ago, we saw a big push. Yeah, there's that green engulfing candlestick that we see right there. But it all ended as fast as it started, guys. Currently, we are looking at a red candlestick, and the price seems to be constrained by the 50 and the 200 moving average. RSI, stochastic, trading at the lows right now. RSI is pointing downwards. Stochastic is literally crawling in the oversold sections. Let's see what's going to happen with the pound. 131.50 with the pound so far. We're going to have a look at some trading signals in a couple of minutes, and maybe we get a clear indication from there. Let's move on to the USD JPY, guys, which is well supported by the 50 moving average, as you see here. Currently trading at 105.23. RSI, stochastic. RSI is pointing upwards. Stochastic still undecided. Bear with me for a second. Right. On a 4-hour chart, again, RSI, stochastic are pointing downwards, but the price is well supported by the 200 MA, guys. And by the looks of the candlestick formations, they are settling higher, way higher than they were earlier on. So as things stand right now, very likely long position, but let's check the trading signals in a minute. And if that's the case, probably traders will set their take profits as their first target to 105.60, which is about 45 cents from the current market price. Let's move on to the Aussie dollar, guys. Aussie dollar currently trading at 0.7257 against the US dollar. Again, pushed by the 50 moving average towards the downside. Very likely traders go with short positions on this one at 0.7229, somewhere there if we look at technical as well. And we see the RSI and the stochastic turning around and pointing downwards. Now, USD Canadian, guys, very good push for the USD Canadian. We see a very interesting recovery. Currently trading at 131.36. Okay, and as you see on the charts, guys, it moved above the 200 MA. That usually indicates quite a bit of buying power. RSI, stochastic, still pointing upwards. There's still a bit of movement for the USD CAD. Let's have a quick look at the S&P 500 and the Dow Jones, guys, the big giants from the States that opened on a negative today. They opened on a negative. We're looking at the S&P 500, currently trading at 3557.75. By the looks of it, we might see it testing the 50 moving average at 3511.49, slightly lower, just a tad lower from where it's trading right now. Quick look at the Dow Jones. Again, negative opening for the Dow Jones. As things stand right now, we might see the Dow testing the 50 MA at 28,814 or somewhere in that region. It's currently trading at 29,221. Let's move on to the dollar index, which should give us a bit of positivity, a clear indication. The dollar index, we see it now settling below the 200 MA. There you go. Look at its performance in the last 4 or 5 hours, guys. The candlesticks are at the same height. The markets are waiting for a catalyst. Very likely, the Fed meeting tonight will bring the catalyst that the markets need. RSI, stochastic, still undecided, somewhere in between overbought and oversold levels. Let's see. Currently, the dollar index is trading at 92.97. There is a bit of potential to the downside. Let's have a look at the trading signals in a minute and see what analysts think about it. Gold futures. Gold is currently trading at $1,876.50. $10, $11 higher than this morning. It's heading higher towards the 200 MA at around $1,892. 20 cents, 20 points movement for gold from the current market price to the 200 MA. There might be potential there. Let's have a look at Brent Oil Futures. Again, pushing higher, trading at 44.34, guys. They bounced off the 50 moving average. Right, and that's why I keep mentioning the 50 MA and the 200 MA, and that's why I have them on the charts, guys. There you go. If you follow them for a week, if you follow us live for a week, you're going to get a hang of it. You're going to start understanding how technical analysis works and that it's not as complicated as people think. So, Brent Oil Futures, 44.32. If they're going to keep on pushing higher, probably traders will set their first take profit levels at 45.20 for the long positions. For short positions, then we're going to probably aim for the 200 MA, which is currently trading at 41.99. Yeah, or 42, let's say. 42 on the dot. Right, let's move on to the absolute champion, guys. The king of the kings, the Bitcoin, which is currently trading at $16,033. We saw it reaching $16,081 3, 4, 5 hours ago at some point today. Then we saw a bit of a pullback. But as things stand right now, look at the Bitcoin. Look at the good almighty Bitcoin, guys, breaking the 16,000 mark. Only this morning and yesterday, I was telling you about the 17,000 mark that might be reached by the end of the week, guys. We're so close. We're only $1,000 away from the new all-time high, which is going to be the 17,000 level. What follows after that? The 20,000, guys. The 20,000 level is the all-time high for Bitcoin, which was reached in December, a couple of years ago. Now, the question is, will we see Bitcoin trading at 20,000 this December? Will I pull my hair out that I didn't buy more Bitcoin? Only time will tell. Let's see what's going to happen, guys. Right, this was it from my side. Let's have a quick look at trading signals. Don't let me go before I show you the trading signals. Let's start with the indices, guys. Let's have a look at Wall Street and see how Wall Street is expected to do today. Nasdaq 100, there we go. Nasdaq 100, strong buy positions on all 4 time frames. S&P 500, strong sell on a 5-minute, strong sell on a 15-minute chart, as well as the Dow Jones. Strong sell early, 5 minutes, 15 minutes charts. The hourly, still a sell for the Dow Jones. Nasdaq, guys, the big Nasdaq. Strong buy on all 4 time frames. There you go. That's an index to look at if you're looking for a direction. Then we're looking at the small cap 2000, or the Russell 2000, DJ Transportation, DJ Utility, DJ Composite, and NYSE Composite. Strong sell on all of them on 2 and 3 time frames. Right, they don't seem to be doing very, very well today, guys. Apart from the Nasdaq 100, and the big Nasdaq that has a strong buy on all 4 time frames. All the other ones have mixed signals. Strong sell on small time frames, strong buy on the daily. Right, let's have a quick look at commodities, guys. Maybe we get a clear indication on those ones. Right, gold and silver, strong buy on 3 time frames. All right, copper, strong buy on all 4 time frames. Let me bring it to the big screen. There we go. Copper, strong buy on all 4 time frames. Very, very good to look at. Crude oil WTI and Brent oil, guys, strong buy on all 4 time frames just ahead of the crude oil inventories. Natural gas, again, a strong buy. And US wheat, which went up for quite a few days now. It's finally pulling back. We're looking at sell and strong sell positions on all 4 time frames. Currency pairs, we checked them a minute ago. We did not see a lot of movement on currency pairs, guys. We did not see a clear indication on currency pairs. Let's have another go. Maybe, who knows? The markets have settled. Euro USD, sell and strong sell, 5 minutes, 15 minutes. The daily remains a buy. The pound. There you go, guys. As I mentioned, sell and strong sell on the euro. The signals became neutral. Okay, now we're looking at GBP USD. Strong sell on 3 time frames. The daily still remains a strong buy. Apparently, the markets are settling right now as we see the signals on currency pairs turning around. Still not clear what's going to happen. We're looking for 4 of a kind, guys. At least 3 of a kind. Let's start from the bottom. Maybe we get a better indication. GBP CHF, strong sell on 3 time frames. The daily remains a buy. GBP JPY, sell and strong sell on 3 time frames. The daily still remains a buy. All right, so at least the pound versus the JPY and the CHF is seen trading lower by analysts today. The USD CAD has a strong buy on all 3 time frames, and the daily is just a sell. And if the strong buy will continue, then probably the daily will turn into a strong buy as well. So USD CAD, very good currency pair to look at as things stand right now. Euro GBP, the euro supposedly is strengthening versus the pound. Strong buy positions on 5-minute, 15-minute, and 1-hour charts, and the daily still remains a strong sell. Right, very, very mixed signals, guys. Remember, it's not a must to trade currency pairs. You have a lot of asset classes. You have 5 big asset classes and probably over 2,000 instruments to trade on. Look for stocks. Look for indices. Look at commodities if the currency pairs seem to be bouncy today. This is what's going on from my side, guys. I had the great pleasure of having Neil Wilson in the studio today for the first time under a new U.S. president. We both lost the bet in regards to the new U.S. president. It is what it is. Most importantly is for you guys to do well and to be well. Join me tomorrow morning again for the European markets open. Until then, remember to trade responsibly and may all your trades be in the money.